Hey everybody, fun set of questions today, ladies and gentlemen.
Hey everybody, fun set of questions.
Whoops, I'm just sorry. Uh, just a little background for those who may wonder why this is a bit rough and ready is still no gas, still no heating, still no hot water, no nothing. So I will stay off camera today. But despite all of the challenges this weekend, this is going to be a good one. So let's get into it. We'll talk about how a cool way to live off of Bitcoin. Little very inspiring question, different methods of doing it. We'll look into DCAS. We'll look into swing trading in tax-free environments. We'll look at how to multiply bags. We'll look at how to identify tops and so much more, including yet another question on XRP. Does it make sense to buy? So again, you guys make up the questions, not me. Let's jump into it. And I'll have to go pretty fast. I've got some people working downstairs. And this is not financial advice. All the questions come from Patreon. I appreciate everybody. The very first question, let's get into it, from Crazy James. I think I need a refresher in exit strategies. I need to understand the key metric that you use to determine the beginning of the end for the crypto bull market. I'm currently only using the check on chain charts to monitor Bitcoin, which is very helpful. What are your top indicators that gives you insight whether the bull is over? Last cycle's bear market seems to have been caused by the Fed's increasing rate cycle. So, interesting question. The very last part, I do not agree. The market is cyclical. Thank you, Sylvie, and everybody for coming. T&D Tesla, Sean Donnelly, K8, Ivar out there. I got to make sure I don't forget anybody. Just catching up with this. Doc Intern, Moto89, Sylvie, merci. So, the Fed increasing rate cycle has nothing to do with it. If you look at the actual last cycle for Bitcoin, it was extremely cyclical, following the exact same timeline, so you could argue it has nothing to do with it. But when it comes to identifying the top, this chart here is the top and bottom indicator, and this was the first thing that we built in early 2022 because I was very peeved off that I missed the top of the last cycle by $10,000, and I said that was never going to happen again. So we built our own indicator for that, and it's based on 21 live on-chain indicators, a composite score with different weightings that looks at everything you can imagine and more. And it sniffs out when people see a top and when activities happen. And there's a lot of psychology behind this as well. A lot of self-fulfilling prophecy, a lot of whale moves, a lot of minor moves, etc. And we are on top of all of that. The real pros know when the top is in, and then that creates a snowball effect, and that takes us down. Now, from all the numbers that I look at regarding the ETFs, regarding MicroSailor and MicroStrategy, they could keep us in a bull market for the next 8 years, literally. So we will know if we get toppy from this indicator. We've been keeping a very close tab on them and see what could change, because the on-chain data does change with the big impact of big buyers like Sailor and BlackRock. But again, we are nowhere near hot. If you look at this chart right now, we're still in the yellow zone. So basically, the blue at the bottom is super cheap. The lime green with the light blue, my colors are really bad, also super cheap. The green, cheap. Yellow, stack a bit. Orange, maybe stack a little bit more. But you can see we are now yellow, and we're very, very far from the top. We've got to go orange and then dark orange and red before we hit the top. And again, we're nowhere near that yet. So the market is not overheated. Don't be stressed if you think it is. And if you look at the way this the performance of this asset is just incredible, which leads me to the next question, which I found fascinating. This one is from Kentucky Boone, long-time follower, first submission. Thank you for your guidance. My wife and I recently hit millionaire status. Woohoo! Crack the champagne. And I'm aiming for financial independence by 42. Currently 36. First child on the way. Congratulations again. You guys are killing it. In a good sense. I hope that's not misconstrued. Retirement was already covered when I turned 59.5. Oh my goodness, you guys are so dialed in. It's not even funny. We've maxed out the 401k, S&P index, and RERA, VU, converted to MicroStrategy Tesla since our 20s. I'm not sure exactly what that means since our 20s, since 2020s perhaps. Now I'm focused on bridging the 17-year gap from 42 years of age, 2030, to 59.5 years of age for 2047. I've built a 450k Freedom Fund cocktail, cost 200k, allocated 36.5% to Bitcoin, 31.3% to MicroStrategy, 25.3% to Tesla, and 6.9% to Sol. I'm also DCASing, which is DCA on steroids, 70,000 a year into Bitcoin, Tesla, and Sol, while I continued to max the 401k. My FI number is 3.5 to 4 million. I guess that's the end game to get to that $4 million mark. And as I say as well, it sounds depressing. When I was a kid, a millionaire was something significant. In today's world, depending on where you live, it's not that much. So I like the way you're thinking in terms of 3.5 to 4 million. Does this strategy make sense? Would you recommend reallocating or rotating once the goals are achieved? And the goal is to reduce work to 3 days a week, spend more time with family. I love this idea. I love the way you plan. I love the way you think. I love your asset allocations. One thing, you can never be sure that anything is forever. Bear that in mind. So when you have allocations like this, anything can go to zero at any time, or anything can change, or a new competitor could come along for any of those assets mentioned. So as I always say, tap dancing shoes. But let's look very quickly at where you are. Now, I didn't model this extensively, but conservatively, again, sandbag numbers, your 200k turned into 450k, and I reckon that will be worth 2.86 million by 2030. Nearly 3 million, not as high as your 3.5 to 4 million goal, but getting up there, and you have other assets that are growing too. So this is based on your allocation of 36.5% Bitcoin. It's about 1.56 Bitcoin. By 2030, each Bitcoin will be worth at least $890,000. What did I miss there? The MicroStrategy will go to about $1 million. Tesla will go to 560. You only have 280 shares of Tesla. I definitely think about getting to that magical 300 number plus. Get to 300, then get to 500, then get to 1,000 if you can. That's going to be a game changer. We'll talk more about that later as well. And Solana, you're very light on Solana. And technically, you could argue you're very heavy on Bitcoin because you have Bitcoin and MicroStrategy. So basically, they're 67, you're 2/3 Bitcoin, basically. I'd go heavier in Tesla and heavier into an alt of some sort. Now, the question you have is, what could you do conservatively? So all my retire on models, by the way, we're working on a web-based one for everybody to play with themselves. Hopefully that will be done soon. But if you want to, a lot of the questions that are coming in today is, how do you borrow and live off appreciation? Or how do you borrow against your Bitcoin? Or how do you take your income, convert it into Bitcoin, let it grow, and then sell it to live? We'll cover a bunch of that today. But just, again, super high level. Assume you have a very conservative interest expense. That would be 4% interest. And you have a very conservative 6% appreciation on your assets. That's about $171,000 a year. Your interest is about $85,000 at 4%. And your net appreciation will be $85,800. And as I always stress, the most important thing when it comes to saving for retirement, etc., is controlling the burn. You've got a new baby on the way. There's a lot of expenses involved with that. But really, if you can find a way to cover your living expenses, a low mortgage interest, low cost of living, no $20,000 vacations, all that type of stuff, you can very easily live off $85,000. And that's assuming a very conservative 6% appreciation on assets, which, of course, as I say, if you're not making 14% a year, you're not treading water. So I think you're in very, very good shape. Keep on stacking, focus on reallocations, and you can do so much more as well, which we'll get to in a second. So great work, you guys. And we'll do a lot more of this as how you can buy, borrow. And last week, by the way, was foundational for the crypto space because every big bank in the United States is going to want to offer crypto services, crypto payments, crypto custody, borrowing against your crypto. It's going to be insane. We are here. We have arrived. SAB 121 is dead, which is wonderful. But we'll be doing a lot more of this going forward as to finding the optimal outfits to work with and loan to values and all that type of stuff. Now, this next question dovetails into this question. As usual, the community thinks along one dimension every single week. It's incredible. But this one is Funky Kiwi. Love your work. I'm a Kiwi living in Florida. A Kiwi is a New Zealander. They're very good at sailing and rugby and all sorts of good stuff. Question, could you look into the idea that Jack Mallers of Strike promotes, which is living on Bitcoin and owning $0? This is where you convert all of your income into Bitcoin, then sell what you need to pay taxes. I modeled it out over the last 5 years, and it came out much better than living on cash, even when living paycheck to paycheck on Bitcoin. Here's the link to the Google Sheet with the model. This is awesome. So, the sheet is private, but I got into it. And this is basically the table. Now, it goes back to, it kicks off in October 2019. And the key things that you just need to know is you spend $8,000 a month on Bitcoin and you buy Bitcoin. And then you have $7,000 of expenses a month. So you buy Bitcoin and then you sell it. But you're netting $1,000 every single month positive in terms of Bitcoin. And then Bitcoin grows and the balance grows. So the quick summary of all of this, and this is such a good model and it makes complete sense because Bitcoin's an appreciating asset. It does very well. But I went through the table, calculated all the key ingredients you need to know, and I'll show you how to make it even better. So first of all, if you did $8,000 a month since 2019, you spent $480,000 in Bitcoin. You also sold $426,688 on living expenses. So you bought 21.96 Bitcoin since 2019, October 2019. Average cost of that Bitcoin is $35,503. Current price $105,000, and you sold 18.45 Bitcoin. So you have a net 3.513 Bitcoin left, and your taxes are nearly a wash because not only did you make some gains on selling your Bitcoin, but you also made some losses. So the taxes were extremely small, at least the taxes I calculated, assuming a 25% rate. And your balance now is $368,865 in dollar value of Bitcoin. That's basically 3.513 Bitcoin times 105,000. So you spent 480 grand and you still have 370. And you've been spending 7,000 a month since 2019. So it shows you right there, you can see that it is a killer strategy and it works. It works really well. Again, you spent 480,000 on Bitcoin and you spent a ton of money on 430,000 almost on living, and you still have 370,000. If you are just holding fiat in your bank, you'd only have 50,000. But because you converted your income into Bitcoin, your balance is now 370,000. So it's very profound. I'll create a cleaner version of this model for Patreon later when I get time. And it's cool to play with. You can plug in whatever numbers you want. But what if I told you I could make this better? So let me show you what I did. I took the DCAS model. All right. Now, first of all, I took the monthly buy of 8,000. That's not a good DCA period, but as it turns out, it worked pretty well. So if you do use the model DCAS since 2019, October 2019, to buy, it'll tell you exactly when to buy the most. You can see where the little green arrows are. That's when you buy, and the ratio at which you buy. Okay, so here, if you do this, you end up spending $30,000 less over that 5-year period, and you get 2.4 Bitcoin more. Okay, sounds impressive. Let's see if I can read that ROI. Your ROI of just straight DCS is 367%, and the ROI with DCAS is 433%. Again, you spend less and you get more Bitcoin. Now, what happens if we flip this to not the monthly buy of $8,000, but a weekly buy of $2,000 a week into Bitcoin? Let's see what happens. So this one, we spend drastically less. We spend 25% less, and we get 0.33 Bitcoin more of weekly buys at 2K. The ROI is far higher, 461%, I think, versus 484. I'm having a hard time seeing these numbers. Hang on, let's see if I can zoom in a bit more. I can't. Hold on. I want to make sure I read these correctly. I'm going to open it on another screen because it's tricky. Bear with me 1 second. Live TV. Let me see. View slideshow. So I can blow it. Okay. The first one, because these numbers are very important. DCAS, you get 24.42 Bitcoin. DCA, you get 22 Bitcoin. On DCA, you spend 496,000. And remember, the model that you had ended back in November 2024, I went to today. You spend under DCS only 470,000. ROI under DCA is 367%. ROI under DCAS is 443.1%. That's the monthly buy of 8K. Now, this one is you get DCA 23.7 Bitcoin, DCAS 24.139 Bitcoin. Under DCA, you spend 538,000. Under DCAS, only 433,000. So you're spending literally 25% less money and you're getting more Bitcoin. Stunning. And the ROI is 364.1% using DCA and 484.5% using DCAS. Either way, if you do weekly buys or monthly buys, you kill. You do much better. So again, taking this model and combining it with DCAS, you get even more Bitcoin. And if you can spend less, this is key here, control the burn, as I say, you HODL more. So remember, if you were spending 8,000 of Bitcoin and then 7,000 of expenses, if you can move that 7,000 of expenses down to 6,000, it can be very dramatic over time. So thank you for that great question. Next one from Shanzi. Thank you for your insight. Given Neptune Digital Asset investment in SpaceX, what insights can we draw from their latest financial reports regarding their value of their SpaceX shares? How might upcoming SpaceX initiatives like Starlink expansion or Mars missions impact the potential growth or risk of this investment? Very good question. So it was a big week for Neptune Digital. Glad you asked. I shared this on Patreon earlier in the week. They did buy a big bag of Solana at a 68% discount. It's about 26,964 Solana, which is awesome. And they have a lot of other assets. They also got upgraded from H.C. Wainwright. This is an analyst firm that looks at a lot of Bitcoin miners and crypto proxies, which is very special. Just to go over Neptune Digital, they're like a MicroStrategy with a twist. They have, what is it? Let me get these percentages right. I'm struggling with my eyes here. 60.8% Bitcoin. They are exactly 13% Sol right now, and they are 15.7% SpaceX. I get the SpaceX quote of the last sales price on Hive, about $360. And they have 26,720 shares of that, 354 Bitcoin, etc. What's really interesting, if you add up their allocations, okay, they are exactly 90% Solana, Bitcoin, and SpaceX. Now, back to your question. This is the big question. Well, before we get to the question, Neptune Digital is up 800% since September. It hasn't done a 35x like Sol Strategies, but it's still done very well. And sorry about the noise. I've got new pipe going in, so it's turned into a work site here. Anyhow, Neptune Digital up 800%. Now back to the question of SpaceX. My answer is I think Starlink is huge. It's a global internet framework. I mean, if you look at the stuff that Elon Musk has, he's got the #1 news outlet on the planet with X, #1 social network on the planet with X. He has the global communications infrastructure with Starlink. He has leader in battery storage, autonomous vehicles, robots coming soon. It's pretty terrifying. Now, regarding SpaceX, I think Starlink again will be huge, but Mars could be a drag on the price because investing in going to Mars, unless the planet's made of gold, which I don't think it is, I don't know what it's going to do. So we shall see. In full disclosure, I have owned Neptune since last year, and I still hold it and enjoying the performance. Thank you so much. And shout out to all the Canadian firms like Solana Strategies and Neptune Digital. You guys took the MicroStrategy playbook and enhanced it with things like Solana and SpaceX. So very well done. Next question. This is from Flying Frenchie. Has posted, bonjour. Hey James from Switzerland. You changed my brother's life and now changing mine. Awesome. Also, as you know, Switzerland has very advantageous tax and crypto regulations. There's no tax on capital gains, stock, or crypto if the asset is held for over 6 months with no active trading. Any recommendations of what you do to take advantage of this? Yes. So what you need to do is think about swing trading. Pick 2 assets that you like. So for example, this is the SOL BTC chart. And the reason I like this pair is they're both going to go up. They both have gone up and both will continue to go up. But if you look at the pair, you can see they oscillate around the same point. So if you owned Bitcoin or Solana starting back in, let me get this date right. What year is that? I say the last 12 months exactly. They have both done the same. They have both performed the same. Now, if you go back 2 years, Solana outperformed Bitcoin by about 350%. So slightly different situation. But what you can do here, because you have to look at this over a 6-month window, you could have to hold for 6 months to avoid capital gains. What you could do is swing trade this pair because they're both going to go up. The question is, where and when do you get out? So there's a couple of things you can see here. One, on the bottom of the chart is the mean reversion model, and that's part of IDSS. What you could do is wait for pico moments to buy or sell. So when you see the green dots at the bottom, that's when you flip your Bitcoin into Solana, and then vice versa at the top. And the confluence model at the top will tell you when to enter and then when to exit the pair. And it's just, all you have to do is get used to a pair like this, pick any pair you want, and determine when you can swing them. There's also another twist here, which is very interesting. And from what I understand as well, if you have a staking income from staking rewards, I think staked assets, again, if you hold them for more than 6 months, there's no taxes, but you'd have to ask about that. So if you lend your cryptocurrency, interest earned is taxable, but the principal amount if held for 6 months isn't. I'm not sure where we are with staking rewards on Solana, but that could make this very interesting as well. So check that out. If I was there, I would wait. I'd use the 4-hour chart, and I'd swing trade between 2 winning assets every 6 months. And by the way, you can still exit a trade after 6 months and sit on cash before you re-enter as well. So you don't have to flip one asset to the other. I did that as an experiment last year, which worked out very well, but you don't have to do that. So you could hold on to cash for a month, wait for the market to dip, and then move into Bitcoin or something. Excuse me. Losing my voice. Next question from Stuart W. Welcome to the family. Turning 100 SOL into 1000 SOL. How to pair trade SOL for beginners. I'm a Brit living in Belgium. Just joined at last, and my first ever question. In one of James's recent videos, you mentioned how easy it is to pair trade SOL and turn 100 SOL into 1000 SOL. And I'm new to this area, but could someone explain beginners how it's done and what strategies to follow? Okay. So first of all, we did this for quite a long time. We had 15 trades in a row that were successful. Then the 16th trade, I think everybody piled into the same trade, and we became targets of market makers. So as I always stress, find your own rhythm, get a tool, get a method, get a process, dial it in with paper trading, and then go. Let's look at what I would do. The best tool for pair trading is pair trading between inversely correlated pairs. We call it pair trading on steroids. So what I do here, this is using Solana 3x long and short with pair trading on steroids in the 5-minute chart. Win rate 66%. That's not good. So I would skip that. But remember, you got to watch your standard deviations at the bottom. When we hit a bottom area at the bottom, that's the time to buy. And that has to correspond with the green triangle above, time to buy. And when you see the red, same thing, red is time to sell. But you wait in the trade until the trend turns. So this model comes with the optimized trading trend model, which is custom for every single asset on the planet. It writes its own algorithm based on the actual historical volatility of the asset. That's the first thing. So 5 minutes for PTOS, I would skip for Sol 3x long and short. Now, if we go to the 15-minute, the win rate goes up to 81%. Again, the more time you have, the better the odds of finding a pattern. If you look to the first third of the chart, you see that big blue rampage all the way up. Optimized trend is blue. You stay in the trade till it turns, and that keeps you in. Once it turns, then you get out. And the same thing, you follow the bottom line too. Then we go to the 1 hour. Win rate goes to 88%. 1 hour is very sweet for this. Same thing. Watch the bottom. You can very clearly see it bottoming, and then you wait for it to bounce and then go all the way up until it turns again like clockwork. And then we can go even more. 4 hour falls to 86%, but still very good. But the more time you have to zoom out, the more you can look at the trend and determine when you trade. It depends how much time you have. Can you look at the charts all day? Now, even though we're talking about pair trading on steroids, a lot of people don't have access to the exchanges that have these 3x long and short. So what I do, personally, I replicate it using 3x or 3.3x or 5x, whatever you want, long and short on Jupiter. But I use the chart as the signal, okay, with the assets, which is basically Sol 3x long on Gate.io and Sol 3x short on Gate.io as well. But I do not use Gate.io to trade. I use Jupiter to trade it. And you go long and short, put in your leverage ratio 3x, and then you're good to go. That's the best way. And we have people in the community that have mastered this and are killing it. Shout out to Anderson. I know you're out there. Anyway, next question from Absolute. Thanks, James and crew, for the 24/7 efforts. I have a simple question I realize I should know the answer to, but don't. When we hear Sol has made a record 33.2 million in daily fees, where does that money go and how is it used? Who controls the distribution? And in a typical corporate structure, it's considered shareholder value. Do these amazing numbers flow through Sol to price? This is a very simple question. So they have a burning mechanism and they burn half the fees, and the supply of Solana decreases. So even though you'll see a validator paying you 8% staking reward for your Solana, but the inflation is only 5% or less, 4.75%, is because of this burn. And this is basically helps, based on economic principles. The more you burn, the less supply there is, the more the price grows. It's very similar to a stock buyback in corporate finance, like Apple has been buying billions and billions of stock back for 10 years, and that keeps the price high, despite the fact they have no growth. The other half goes towards validator incentives. This helps them maintain and grow the network security and efficiency and services, and can increase trust, of course, in Solana. And this helps the whole chain. Now, I'll take another simple example because we just had some breaking news this morning, which is super interesting, which ties into this question. So the timing of this question is perfect. Jupiter just announced a 50% Jupiter buyback. And remember, they made $10 million in fees last weekend. Just weekend, with just the perp revenue only, not the swaps, just perps. That's how much money they are making. They're printing money hand over fist. And with that 50% buyback, kind of like what Solana does, with 50% burn, this shows you how much Jupiter it could impact. If they made so much money and they have a 50% Jupiter buyback, this could reduce the supply by 9.4% over the next year. That's an annual buyback. And the supply is now 7 billion Jupiter because it went down by 3 billion because they burned 30%, and now they're buying the rest back. So it is crazy, crazy impactful, and this would be good for price appreciation as well. And in full disclosure, Jupiter is now my biggest Sol alt position as well. I need no Sana to rebound to overtake it. Next question from Picklesmith. I'd like to rotate my crypto profits into Tesla, and I will also take out some lifestyle chips at some point too. I'm a little concerned about using such a volatile asset as Tesla as my bank account. What are the chances Tesla dips back down to 200s or 100s again in the next 1 to 2 years? P.S. You rock. You rock too, Picklesmith. Thank you. By the way, Tesla has been my bank account for the last 2 years. I remember years ago, Bitcoin was my bank account, and then it became Tesla because Tesla was so cheap. Depends on what the winning asset is and what the relative price is. That becomes my money market, and I don't mind the volatility. But let's look at your question. Can we get into the 200s or low 100s again? Well, Tesla follows a 4-year cycle, not unlike Bitcoin. But it's a bit different. So what Tesla does is it goes on a rampage. Typically happens over the space of 12 to 18 months. And then it chop-solidates for sometimes nearly 3 years. It just depends. And we had that wicked chop-solidation. In fact, it was a dream come true for me because it enabled me to buy a ton of Tesla under 150 bucks, which I never thought we'd see again. Because remember, we went to a 420 back in 2021. Now we're back in rampage mode again. So the chop consolidation was a function of, funnily enough, the first question thought it was interest rates that impacted Bitcoin. No, but interest rates definitely impact stocks like Tesla in a big way. And right now, interest rates will come down, I believe. A lot of people believe that too. And that will help Tesla more as well. But not just that, they have so much stuff that's going to generate tons of profits. You know, Megapack business, FSD licensing, the Optimus bot coming. There'll be a 30,000 ramp rate by the end of this year. I mean, there's nothing but tailwinds behind this stock. And I believe the next 2 years will be incredibly impressive. And sorry about all the banging and noise. That's driving me crazy too. So pardon my dust, as they say. Now, the question you had was, what are the odds it'll fall back down below 200? That would take us to level 2 on ATR model. I think the odds of this are extremely slim. So don't bank on it at all. It would have to be something catastrophic to take us back to 200 bucks. But remember, we had years to stack under 200. And that's where we are now. I see nothing but breakouts and maybe 600 to 650 by year end 2025. Next question from Cyberama. Hey James, big fan of the channel and its life-changing content. My kids will be the true beneficiaries of your wisdom. Thanks for saying that. And I will say, raise your kids well. Don't give them handouts. Make them earn every penny. That's how I was raised. Anyway, your SCP profiler shows XRP's FDMC is over $3 million per user. But how much do we need to factor in the different use cases for each blockchain when interpreting the SCP scores? For example, XRP is institutionally focused, so I guess it is natural for those users to be making much bigger transactions than the average user on Sol, Sui, etc. Could this be different use case? Explain some of the metrics, or have I just misunderstood how this is calculated? I'm not an XRP bag holder, by the way, just curious. That's a very good question. So, for example, the average transaction size on Ethereum is higher, far higher than Solana. But it has to be because the fees are far higher too. But at the end of the day, adoption will be kind of crazy. Let's look at XRP. And this is probably the last XRP question I'm ever going to answer. The transaction speed is 38.6 transactions per second. Literally, Solana is 100 times more. Okay. Next, Avalanche, dead chain, has more daily active users than XRP. And I know you're saying, yeah, maybe there are institutions, etc. But more than that, a lot of people are getting very vocal about XRP. And I've been very vocal about it for years. But now the world is. This is from Blue Checks Matter. XRP is a CBDC. Stop with pushing his garbage. XRP is 100% pre-mined. The CEO and the rest of the dev team is all about CBDCs, and Ripple is becoming the largest platform for them. Okay, it is just crazy. Now, that's just one piece. And they have 50 billion tokens in escrow. They dump them. Inflation, tokenomics. It's all just horrific. Old technology. It's just crazy project. But I urge you all, go to Jack Mallers on Twitter. Listen to his 5-minute rant. XRP and Ripple are attacking Bitcoin. They are lobbying against Bitcoin Strategic Reserve in the US, which Jack says that's going to threaten him, his family, his kids' future, and the future of this country. And it's kind of crazy. It's worth listening to, everybody. I'll drop a link below in the details under the video afterwards. But again, there's Bitcoin and there's everything else. The XRP thing is crazy. It's at levels it was 7 years ago. So if you bought it 7 years ago, you've gone nowhere. And that's just where we are. Now, before I wrap and get back to stuff, this week we sponsored Happy Doggo in Thailand. And they're helping street dogs, because there's a big street dog problem in Thailand and many places like the Philippines, etc. But they provide fresh and healthy food, and they service over 800 dogs currently, and they've neutered about 50,000. And the dogs that can't make it on the street are adopted out to folks in Thailand and abroad. These guys do great work. Really appreciate it, everybody. Tomorrow, I will be moderating DCA with the team, and I look forward to it. And I want to thank everybody. I can't do questions today. There's too much background noise, and I feel I just it's too much. But I want to thank you all for coming, everybody. I will see you all tomorrow on DCA. I've got to get back to try help the guys fix stuff. Thank you all for being here. Sorry you can't see my face, but you don't want to anyway today. Thank you. Have a good night.